In trading, every candlestick tells a story. In this very video, I'm going to be teaching you guys how to read the chart like a pro. Now, these are two questions I want you to ask yourself. Right, the first one is, why does the price moves in the market? Then the second thing is going to be, what makes the price moves? In this very video, I'm going to help you understand the market. You've taken a trade, you set a limit order, or you entered instantly, you took a sell. Price activated your trade, went down and hit your full take profit. You made money. Second case scenario, you took a sell. Price came, took you out, hit your stop loss first before going in your favor. That's the second case scenario. The third case scenario, you were trying to predict for a sell, but price came, started buying. Now, in this very video, I'm going to help you understand price movement, why the price is going to respect at a level, and this is going to help you understand the chart, understand the market much better. And now, if you understand the market, you are not watching this very video, don't think about winning all the trades you will be taking, but at least you will have a better win rate and a better understanding of the market, and you will be able to know what the price is going to do at a certain price level. So I'm not going to waste time. Let me begin. First thing is going to be, why does the price move? Let me explain these two things for us. Then I'll go to the chart, show you the different candlesticks, show you literally everything step by step so you understand what this video is, right? Now, why does the price move? There are two things that is going to make the price move, right? That makes the price move. First thing is going to be, price moves to fill orders. Now, price moves to either go over, collect left orders, meaning some institutional traders were left behind, right? Some orders were left behind. Price is going to move to collect those orders and go down. In this case, price was going down. I'm going to explain literally bit by bit, right? I'm just trying to brief it so you guys can get a clear understanding of what I'm doing. Price is going down, but at a point, it went back up, then dropped again. Price went back up to collect those left orders. Some institutional traders were left behind. Some institutional traders have their limit order right there that were not activated. Right, they have their orders right there. They are waiting for the price to come back there so they can take their trade. Price eventually came back and they got in, and what happened? Price went down. That's what makes the price moves. Then the second thing, price moves to hunt liquidity. There's liquidity right here. Liquidity, if you don't know what it means, is stop loss, right? Stop orders. You know, if you take a trade, you took a buy from this, maybe this demand level or this support level, depending on the strategy you trade, you took a buy. Your stop loss is below this very low. If that trade eventually goes down and you got stopped out, you hit stop loss, you're going to lose money to the market. You're going to lose liquidity into the market. That's what money is. That's what liquidity is. Liquidity generally is money in the market. If you get stopped out now, you're going to lose money. You've provided liquidity for the market. That's what liquidity is, right? So the price moves to hunt liquidity. There's liquidity below this very point. That's why the price went down and went below that very point. All this liquidity, all the traders who try taking buys are going to get stopped out. Now, they've provided liquidity for the market. They've provided liquidity into the market, and that's going to help the price moves. Then the second thing is going to be, what makes the price moves? Simple. Institutional traders buying or selling. That's what makes the price moves. Institutional traders are buying a currency, both the crypto market, they are buying a crypto pair, price is going to be going up. You're going to see the price going up, meaning they are interested in that crypto. They are interested in investing, buying that very crypto, or taking buys on that very crypto. Same thing. If gold is selling, everybody know gold, SAUSD. If gold starts selling, it's going to start going down. What's making it to go down? Because institutional traders, they are selling. They are interested in taking sales. That's why it's going down. That's what makes the price moves. Institutional traders buying or selling. And the price moves to either go fill orders or to hunt for liquidity. So these two things now I've answered those two questions. Now, understanding the price movement. How does the price moves, right? Why does the price moves? You now know that. How does the price moves? How do I know what the price is gonna do at a certain level? Now, what I generally do is this. I do then to go to a higher time frame. I'm gonna give you step by step on everything I do, and by the end of the video, if you find the video helpful, share with your friends so your friends can come over, watch this, understand, and get a better understanding of the market. Now, the very first thing is the higher time frame. Higher time frame. And now, what does this higher time frame does? Right? And what do you use them for? You use them for your key levels. And these key levels, they are levels institutional traders are interested in taking action. They are interested in taking trade from. Remember, why does the price move? To fill order. What's going to make the price move? Institutional traders buying or selling. Now, those key levels, they are levels where those institutional traders are going to likely enter the market, are going to likely take their trade. And those key levels are always POI. And this POI, they are your order blocks, breaker block, support, your resistance. Right? These are on a higher time frame. I'm going to show you practical example, show you on the chart. Now, this is generally what it is. If you watch the price, this was a level the price previously got to. Watch this closely. This was a level the price previously got to and went down. Automatically, this is a POI. This is a key level. Right? This is a level of interest. POI now is just a point of interest. And this level is a resistance because that's the level price got to and started dropping, started going down. Same thing. This is an order block because order block is generally the last opposite candle before the price started going down. I believe every single one of you watching me know what order block is. Right? Order block is generally a point where institutional traders entered the market or executed their trade. Right? Now, price was going up. At some point, it started going down. So that point where it started going down, that is a point where they made the decision to start taking sales. And there's going to be an order block right there. So order block is generally where institutional traders has previously executed their orders. And secondly, order block is also where we have large resting orders. Watch this closely and understand this. Price moves to fill orders. Now, order blocks are where we have large resting orders and also where institutional traders has previously entered the market. Basically, these are levels now where price is going to likely come back to, which is an order block. Right now, generally, order block is the last opposite candle, meaning if this price was going up, the last blue candle before it started going down is an order block. Let me show you a practical one. This price was going down. The last black candle, which is this, my chart is black and blue, so yours might be another color. The last black candle before the price started going up is an order block. That's what an order block is in the market. And this order block now are where we have large resting orders. And these are levels institutional traders are going to be interested in taking trade on. If you watch, this is a level, which is an order block. Price came back there, tapped on it and dropped. What just happened? On getting there, price has moved to get there. And now it has filled the order. Filling that order now meaning institutional traders, they are buying or selling. And what's going to happen? Price is going to sell. Now, each of these candlesticks now, what does this candlestick tell you? This is a key supply level, key order block, right? I generally call it order block. I don't call it supply and demand. I generally call it order block. This is a key order block level. And that's exactly the level where the price came to. Same thing. Let me show you another practical example. This is a key order block, which is a level the price came to before it started going up. So generally, the price moves to fill those orders, and once it's there, international traders are gonna be interested in taking sales or buy, which is gonna make the price move. So understanding this now, let me now show you how to go about it on the chart every single time. First thing first, you want to know who are currently in charge of the market, which is who is in charge. Meaning, is the price buying or selling? Are buyers in charge or are sellers in charge? Because at some point, buyers are going to be in charge. At some point, sellers are going to be in charge. First, you want to know who is in charge of that market. Then the second thing you want to know is going to be where is the next orders. Meaning, those are going to be the next orders to be filled. Meaning, if the price starts going up, meaning buyers are in charge. It's going up. At some point, sellers are going to take charge. And where are they going to take charge? Where they have their orders, where they have their limit order, their pending orders at. And those levels now are your key levels, like I said, your higher time frame key level or POI. And what did I say they are? Order block, breaker block, support, or your resistance. Now, first you want to know who is in charge of this market. Is it buyers or sellers? Then secondly, where is the next orders? Meaning, where is the next level price going to collect orders? And once the price collects that order, what's going to likely happen? It's going to go the opposite direction. If it was going up, once it collects those orders now, meaning sellers are going to step in. Sellers are going to now take charge. And what happened? It's going to change. Now, once you now know these two things, you will be able to start making decisions. First thing, how do you know who is in charge? Me personally, I use my break of structure. When the price gets to a point, goes down, comes back to that point and go above that very point, that's what I call a break of structure. So a break of structure is a break above a previous resistance. That's what a break of structure is. Once the price creates a previous resistance and then break above it, that's a break of structure. And what is that telling me? It's telling me who is in charge of the market. If sellers are in charge now, the price will not break this very point, but instead it's going to go down to break this very point. So if it's breaking structure to the upside, breaking structure and is going up, it's showing me buyers are in charge. Then if it's breaking structure and is going down, it's showing me sellers are in charge. Just as simple as that. Now, I want to now know where is the next orders to be filled. And where is that next order? The higher time frame key level. Either 4-hour time frame, daily time frame, 2-hour time frame, 1-hour time frame, depending on the type of trader you are. Right? Now, I want to know who is in charge of this market. Then this is the next level. I can mark it out. Right? On the higher time frame, this is an order block. I mark it out. Level price can get to. What am I gonna do? I'm gonna start looking out for buys. Now my entry time frame is always my 15 minutes, 30 minutes time frame. Right now, if you want to understand this different time frame I use, how I go about it every single time. Right, there's a link in the description to join my mentorship class. Just click on link and you'll be redirected. But this video is also gonna help you. Right, the mentorship class is cheap. Price about $35 for 1 month. Is cheap, so you can just join, learn it from me. Right now, if you watch this closely, how do I know who is in charge of the market? Break of structure. If you watch, the price had is high, first high right here, it broke past it as a break to the upside. What's that telling me? Buyers are in charge, because that's a break to the upside. Then it had this other high. What happened? It broke it again to the upside. What's that telling me? Buyers are in charge of that market. Another high right here, broke past it. Now, what's that telling me? I'm interested in taking buys until price gets to the level I expect it to get to, which is the next orders to be filled. And now, where am I going to take trade from? Since I now know it's going up, buyers are in charge by marking out a break of structure, where am I going to start taking trade from? Where can I jump on a buy and it's going to go well for me? Right? I do buy from order block, which is going to be the last opposite candle before price started going up. So this is an order block, and if you watch closely, we have this last black candle here. This last black candle, which is also an order block, right? Then we have this other one, last black candle, which is also an order block. Last black candle, which is also an order block. Let me mark it out so you can see most of them. First one was this very move. And what's gonna make you take your trade? First thing, you know who is in charge. And with the strategy I use, I'm just gonna brief in my strategy so you guys won't get confused in understanding this. With the strategy I use a structure liquidity POI. Structure is just the break of structure. Liquidity, I believe you know that, money in the market. Then POI are my order blocks and breaker block. So what I use is my entry. I use my order block or breaker block. I believe you now know what order block is. Then for me to know who is in charge of the market, I use my break of structure, which is the BOS. Then liquidity is important, which is going to help me confirm and validate it. Let me show you a practical example. I'm taking this very buy from here, meaning international traders are going to join me in this buy because they are the ones who are going to buy. That's going to make this price go up. So international traders are going to join me in this very buy. But for them to join me, they always need liquidity. They always need money present in the market. And watch this. The price had this low. Price took out that low. Meaning it took out that low. Traders who try taking buy from here will be stopped out. Meaning money has been gotten into the market. Money has been provided into the market. So I can take my trade like this. In other words, now, what you do is once you have your level, your order block where you want to take your buy from, you want to check if there is a low protecting that very level. If I plan on buying from here, then I want to ask, do I have a low protecting this? If I'm planning on selling, I'm going to show you some sale example. Do I have a high protecting it? And if you watch, this is a low. What do I expect the reaction to be? Price come back down, take out that low, then I can buy. Because traders are going to likely buy from here and they will hit stop loss. Meaning, this is now a valid zone because traders have been stopped out. This was my first trade. I can target my 1:3, which is the lowest I do recommend for everyone. I can target my 1:3, and if you watch, tapped on it, hit your first 1:3, take profit. Now, you have this other order block. Right here. This was a pretty much lower time frame. Price came, tap on it, went up, right? But it didn't create any liquidity. You might not be confident enough to take this, but it's an order block. And you see, price came back, respected it. As far as buyers are the ones in charge of this market, it's gonna work. It came, gave you a 1:3, breaks the order show the second time. Right now, we have this other order block. This price did not tap on it, came close, took out this low as liquidity, came down, did not tap on it, still went up. Now, who is in charge? Buyers. And if you watch, there was a reaction right here. This reaction do suggest something, or this reaction means something, right? It means buyers and sellers, they were trying to check who is in control of the market. Buyers are trying to take charge, sellers were trying to take charge at this very point. And who eventually took charge of the market? Buyers. Now, how are you gonna know? Okay, buyers are gonna take charge of this very market when this level is in an order block or a breaker block. Meaning, if you mark at this level and you see that the price is ranging, buyers and sellers that are trying to see who's gonna take charge, you want to check, is this level an order block or a breaker block? And is it a buy order block or a sell order block? If you're able to know that, you will be able to know who is going to take charge eventually at that very zone. At this very zone now, this was a range, and who is in charge? Buying. This range now is just the price accumulating liquidity. Buyers and sellers trying to take charge, and what happened? A huge buy stepped in. Price rallied up. Now, price keep buying. If you notice, I tried taking a sell right here, but I got stopped out. I took this very buy. How did I took this very buy? From this other block. Using this low as liquidity, price came, tap on it, went up straight to take profit. Now, this is now a breaker block. You should know what a breaker block is. If you don't know, you just go through my videos on YouTube, you'll get it. Now, finally, price got to this very level, which is a key level on a higher time frame, which is where the order is. Sell orders, because price was going up. Once it gets there, if it's going to start selling, meaning sell orders are going to be filled. Immediately got filled, what started happening? Break structure to the downside. Now you are now able to read this and know who is now in charge. Sellers. And if you watch, it's now breaking structure to the downside. It's now breaking structure to the downside. What am I interested in doing? Sales. And where am I going to sell from? Other blocks. Price took out that high, tap on this other block, dropped. But I didn't catch this very sell. Price at this other block, break structure. All of this break structure. Where is it breaking into? To the downside. Then price came, tap on this other block, sold off. Having this high, I didn't catch it from this onset, from this first move. It had this other high. I expect the price to take it out, then tap here and dropped, right? And I had the setup where I had this very opportunity where I was about taking this very trade, right? So this is how I go about trading every single time. And if you notice with what I've been saying and with what I've said, you can easily see with this, you can read the chart like a pro, because you now know what's going to make the price moves, how to know who is in charge of the market, and with that, you can now start taking trades more often, right? This was a sell I had, and if you watch, the sell hit 40p, right? This was another sell I had right here. This was a sell I had on BTC, and this sell also hit 40p. Why? Because I know who is in charge of that market. And if you watch closely, take a look at this. Where am I taking them from? Other blocks. Where am I taking them from? This very other sell, other block. The sell I took on BTC, where did I take it from? Other block. With this one, from this previous order block, which is now, you now know, a breaker block. This trade gave me about 1:13 risk to reward ratio, right? But I entered somewhere late, right? Now, from a breaker block, using this high as liquidity, price came down. Now, I'm able to read this and know what the price will do at a certain time. How are you able to know? You now know what makes the price moves to fuel orders. And once it's done filling that orders, it's going to move. Either sellers are not interested in that market, meaning it's going to now start selling most of the time, or buyers are not interested in that market and it's not going to start buying most of the time. And what is now your duty? To look out for that buy. Look out for all possible zones to buy, which is going to be the order block or the breaker block. Just like that, you'll be able to understand it. Right, I've showed you some practical examples. I don't want the video to be too long. What you need to do is just to go over, practicalize what I've given you. Practicalize what I've given you. Then you see how it's going. Then you drop it in the comment section how I can help you improve, right? What your challenge is. Once you have tried this out, understood something I just explained, then I will see how I can help you. So guys, I'll see you all in the next video. So take care, guys.